Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, I want to talk about the top 5 stocks to buy before this crash. I definitely think, guys, we are starting to enter a bear market. There has been so much volatility, so much ups and downs in the market. If we actually go ahead and right now we're looking at the S&P 500. If we go ahead and we look at the day performance, you guys can see that over the past couple of days, we've just seen so much volatility, so much ups and downs and some consolidation. There's just been so much volatility. And anytime you have this amount of swings, I hate to break the news, but a crash is coming. And we're going to be talking about the top 5 stocks that you guys should buy before this crash, right? It's always better to go into a recession with some sort of strategy, some sort of mindset. And that's really what I want to talk about and focus on in today's video. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down below. So starting off with the very first investment. So the first investment that I would recommend if we have this stock market crash is to invest in the S&P 500. Now, the reason why I like to say that and bring that up is because the S&P 500 is a great way that beginners can invest, right? Recessions should be looked upon as an opportunity for people that have missed out on previous bull markets to hop in at a more affordable price. Now, looking back at the S&P 500 over the past 90 years, through all the ups and downs and great depressions and bull and bear markets, it's had an average annual return rate of about 9.8%. So no matter what, as long as you have a long-term outlook, you guys will be just fine. And I definitely think, guys, the best ETF that I would recommend is SPY. This one here, it's a great one. It's very, very affordable. You know, $413 per share. It's very, very affordable. You get dividends, and it's fantastic. I definitely think that this would be the first one. But moving on to more of some stock picks. The next one here would be J&J. Now, J&J is also known as Johnson & Johnson. Johnson & Johnson has historically not fallen as much during recessions, which is fantastic. So this is almost a way that you guys can invest and almost have a little defense in your back pocket. Look at it. If we actually go to, let's just say, the past 3-6 months or even 1 year, you can see we've had just a little consolidation, but overall a nice solid upward trend, right? If we go and we look at, from the beginning of this year of January, which is right here, we have decent growth. The stock went from 170 all the way up to 176, hitting highs at 186. But the general market has actually lost money. So this is outperforming the market. You're going to be getting good, solid earnings plus a dividend of $1.06 per quarter. Definitely worth having in your portfolio and one that I would really, really recommend. Now, moving on to the next one here. The next one here is ticker symbol WM. This one also is known as Waste Management. This one here is another fantastic defensive pick. The reason why I say that is because everybody needs to get rid of waste, right? Waste Management is a trash company. It's also a sanitation company. So no matter the market, people still have to throw things out. People still have to go to the bathroom. And definitely, this is where they're going to make money. So you guys can see a lot of consolidation. Looking at from the beginning of the year, you guys can see from 150 to 158, highs here at 170. This is a good, solid pick for this upcoming crash. Not to mention, guys, decent earnings. They bring in a lot of money. They brought in about, the past quarter, about $4.6 billion. Plus, you guys can see a dividend of 65 cents per quarter. So getting great growth, getting passive income in the forms of dividends, one that I would truly recommend here. The next one is ticker symbol HD. Now, this one here is probably the most volatile one that we will talk about. The reason why is because you guys can see we've seen a lot of sell-off from it. Now, historically, looking back at all the previous recessions and crashes that we've gone through, this one here hasn't fallen as much compared to the market. The reason why that is people still need home improvement goods, right? People still need water heaters, faucets, shower heads, lumber to build. That does not slow down. At the end of the day, yes, some home remodeling might slow down, but overall, people still need necessities, and that's what Home Depot can provide. So you guys can see it does have great growth, a little more volatility than I personally would like as of right now. But honestly, I look at this as more of an opportunity rather than too much volatility. Dividend of about $1.90 per quarter, which is great. They bring in a ton of money, right? They brought in the past quarter here in quarter four about $35 billion, which is so much money. Heavy support here at 300. For me, it's just a fantastic pick. Getting in on some sort of support line, dollar cost averaging, good dividends, compounding your account, and a great way to invest. Now the next one here is TGT. This is also known as Target. This one here a little more volatile. Looking at that past from the beginning of this year, the beginning of the year was at 225. Right now it's at 230, so a little better than the S&P 500. Very similar to Home Depot. A little volatile, but not as bad. But the beauty of this is looking back at previous recessions, this stock has actually done very, very well. 2008, the average stock fell about 40%. This fell 20%. In 2020, when we had that nasty crash, the average stock fell about 35%. This only fell about 8%. So I definitely think it's worth having some Target in your portfolio. Good numbers. They bring in a ton of money. You know, the past year they brought in $106 billion plus a 90-cent dividend. You cannot go wrong with it, guys. But the last and final one is AAPL. I think everybody should have this in your portfolio. A little more volatile than I would like, but overall a fantastic company. The leader of the S&P 500. Good stock. They bring in so much money, and the beauty of this is Apple has so much money in cash that when we go through crashes or recessions, what they do is actually start to dabble into some of their cash because they have over $160 billion in cash. So this is a company that's not going to slow down. They have the money to invest into products, invest in their people, and overall grow. And that's what we look for investing, guys. So I hope you guys enjoy it. My top 5 picks that I would recommend buying. Hope you guys enjoyed it. If you guys got anything in value, hit that like button, subscribe. If you have any questions, ask me in the comments, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.